following is a presentation of TFNN. Now, the author of Mastering Probability, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the March 28th, terrific Thursday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, and thanks so much for joining me, folks. I absolutely treasure your presence here today, and my outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life, because leading an inspired life, folks, that is what it's really all about. So let's go take a look at one of our tools. I love this tool. This tool is called Zeal. That's right. Zeal is the inward fire of the soul that urges you onward toward your goal. How about that out there, folks? Zeal is the inward fire of the soul that urges you onward toward your goal. You know, each time an opportunity comes your way that allows you to express your talent, I say welcome that opportunity with open arms out there. Feel the stirrings of the zeal and enthusiasm. Feel that move within inside you. You know, zeal, I think a great word out there. And that zeal can be the inner fire that just simply stirs us into action. What kind of action? That's right, David from Clearwater, he had it right. Massive action. Zeal, folks, that is the impulse to go forward and urge all things within us. Here's a great incantation that you can use. Incantations are great. Write this one down. Good, better, best. Never let it rest till the good is better and the better best. How about that for a nice little tongue twister for Thursday morning? Good, better, best. Never let it rest till the good is better and the better best out there. Repeat that over and over again. That'll get your embers burning up there, fired up. Ask yourself each day, you know, this is one of the best two words that you could actually use each day. What if? What if? When you inject what if, you're going to get more zeal, more enthusiasm in all of the work, in all of your communications. Communications with your coworkers, your family, your relationships, everything that's out there. The question is, are you ready for the zeal test? Why don't you go ahead and put it to use today? Progress comes from asking one question, folks. What if? So begin your day by asking what if, and then add that little special ingredient that we call zeal out there. 877-927-6648. Let's go take a look at the zeal of the marketplace. Certainly yesterday you could see a lot of zeal out there. As we came onto the air, we had the market pushing down. We had the market right about this time here at about the 10 a.m. time frame. We had the market, moving into that oversold territory. We know by taking a look at the EKG of the market, and that's exactly what it is that we're doing here when we take a look at the market and the oversold territory, where the bulls and bears are hanging out. We're going to go see where the bulls and bears are hanging out here this morning. But you could see yesterday moving right down into an area of support here, this bull sash candle. This is the 30-minute chart we're looking at, coming in at 8:30 on March the 26th out there. Of course, today that was 2 trading sessions ago. You know, this configuration right here as the market was pushing down into that level of support, into the oversold territory, and we looked at it on the 30-minute chart, not a bullish configuration right here. It was on the 10-minute level. We know where the bears are hanging out. We could take a look up here at the top of the range here. The high coming in at 3:30 on March the 27th out there. That, folks, is a shooting star candle out here. You've got this next candle that is at 4:30 in the morning. That, folks, is a bearish engulfing. The 3-candle configuration right here is an evening star. And then you've got one more bearish candle up here at the highs. This is the what we call a bearish bear sash, bear separating line out here. So right up here is where the tug of war is going to be between the bulls and bears. Actually, have watched it unfold most of the evening. If you take a look at coming into the close here yesterday, we see a small little shooting star out here. This one at about 5:30 in the evening, a little bit of a bearish engulfing right up here. So let's just go ahead and take our lines. If you're following along and watching us on TigerTV, you can see that. If you're just listening in on your mobile device, or maybe, at tfnn.mobi or the radio, Thanks so much for doing that. Remember, you can always catch the live stream of this on that smartphone device out there. Just go to the homepage of TFNN.com. Over on the right-hand side, you will see 3 little buttons, and click on that. This show will stream live. The archive, of course, on Channel 9 on Tiger TV. So these red lines going across the screen here, that is the resistance line right now set up by the bears out here. In fact, as price was moving up into the 7 a.m. time frame, moved sideways here just for a candle, and then the bears showed up for work. Bearish engulfing candle right here at the 8 a.m. time frame, followed up by a little shooting star right there, and then one more bearish engulfing to round out the top out here. That's what's going on inside the ES Mini on the 30-minute chart. So your area here today for resistance is going to be these highs. We saw that 100% move coming all the way back to that 6:30 a.m. time frame on March the 25th. We can see really since the week opened, just really been traveling in a relatively tight range out here on the ES Mini. Let's go peek in on the currency market, see what's going on over there. In fact, let's see here. We can take a look at all of the different currency pairs. Why don't we go ahead, excuse me, and do that. So let's check in here on the Euro-US dollar currency pair. Let's take a look at the 30-minute chart. We know that there is some decent support out here right now, down around this TD13 count. That's an important area to mark, because what's unusual about this is it's no A to B equals CD, no Fibonacci expansion relationship, just a way to be able to measure when price can become extended. And what we can see here is that level. You know, we pointed this out yesterday, that candle coming in at 10 o'clock yesterday morning. Excuse me. I just got something in my throat there. That low is 127.542. Now, this here happened to be up early in the morning trading, and at this candle here at 5 o'clock, that was when the unemployment claims in Germany were actually released, and we saw the market start to move lower here. But what was interesting is what really did hold this in place right out here. And again, we're looking at the euro. We're taking a look at the 30-minute chart out here, and what held this in place just seemed to be that low, that little TD combo count. So now we know where Super Mario and his band is hanging out. In fact, created this little bearish and bullish engulfing candle right here during that 6 a.m. session. Of course, we can also see that the bears are hanging out right about this price level right here. You've got a couple of shooting star type candidates right out here at 3:30 in the morning. Another one that followed up right here at 8:30 as well. And we can see, you know, the euro here on the 30-minute chart really consolidated for quite some time, moving sideways out here before it made its little small leg down yesterday as we came onto the air. Let's go take a look at the daily chart. The daily chart shows that the euro has broken through support. Let's put this up. We'll take a look at both the daily and the weekly. So here's the daily chart for the euro clearly below what we'll call support level 1. Today's candle, today's little bounce, really nothing much out there. The euro wants to make its way now down to that, and you can see not oversold at all into the 126.593 level. That's the next area of potential support for the euro. That's where we'll head. May not do it today, may take a little breather, and then go ahead and pick things up on Sunday evening when it starts trading again. If we take a look at the weekly chart out here on the euro, we know that it broke a hammer, so we'll take a look at that hammer candle once again. As soon as I find it here on my screen, I think I may have to just go ahead and switch the time frame out right now. So let's see if that's out there. There we go. There's the hammer candle that came in. That was last week. Looks like we're going to close below that, and that would be a failure. Clearly, it says the 0.618 level, not that far down, 1.2678 out there. So that's where the euro is headed. Let's go back and take a look at some of these other currency pairs out here. As long as we're in the currency market, let's go and take a look at the Japanese yen, U.S. dollar, Japanese yen currency pair. This is a 60-minute chart out here. We show really two different patterns, a Gartley buy pattern. That was the one that came in, a 0.786 Gartley buy pattern. That's coming in off of a swing point from 1 o'clock in the morning on March the 5th out there. That low, 92.90. Had some really nice Fibonacci numbers out there. We got a little bit of a bounce. Should have received more of a bounce than it actually did. If we go from the high, which would be right about the 10 o'clock in the evening time frame on March the 11th, all the way down to the low that was put in. What we'll see is all that we got on that bounce there was a 0.382 retracement. 0.382 retracement, and it looks to me like what the U.S. dollar Japanese yen wants to do is make that larger Gartley buy pattern. That would be the 0.618 Gartley buy pattern. If you're watching us on Tiger TV, that's really the yellow wings that you are seeing out here. Now, what the U.S. dollar Japanese yen currency pair did also on the 60-minute chart created this little hammer candle right here. Slight close below it. You can see that level really being tested here for quite a time period at about last night, right around the 11 o'clock time frame. The midnight time frame went ahead and rejected that area, came back down at 1 o'clock in the morning to test it, was testing it during the 2 o'clock session, was testing it again here at 6 a.m., rejected it coming into that 7 o'clock time frame session. So that's the hammer candle out there. Looks to me like there's some cracks in the ice, those cracks in the ice wanting to send the U.S. dollar Japanese yen right down to about $93 and a little bit of change out there. That's where I'm looking to put on a long trade inside the U.S. dollar Japanese yen currency pair. Probably won't happen today, but something we ought to be paying attention to Sunday evening, early Monday morning, right around 93.13 out there, and we ought to be looking for some type of bullish candle when that takes place. Let's go take a look at the Great British Pound, U.S. dollar currency pair. Here is the 30-minute chart. On this, we don't have any patterns there drawn in, so let's go ahead and do that now. Let's go take a look at the A to B equals CD down here that we have. This A point right out here coming in at 8 p.m. on March 24th. That's your A point. Your B point is the low at 11 o'clock on March 25th. C point was the retracement to 4 a.m. You can see that 1-to-1 A to B equals CD completed at 11 a.m. yesterday. 877-927-6648. Futures relatively flat right now. Give us a call, folks. We can take a look at your stock when we get back.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Welcome back, folks. As futures are really flat out here in the marketplace, let's go peek around the world. Then we'll start picking apart some of the stock charts here that where we see some pops and drops in the marketplace. But first, let's take a look at the DAX here. The DAX this morning trading up, let me see exactly how many points this is, about 28 points right now, out at 78.17. This running into that gap up open window that was created here off of the March 5th gap up off of the March 4th area. We can see the low, which is going to be the bottom of the gap right now, which is going to be the low of March 5th, 72.33. That area we pointed out yesterday, that's going to be what we're calling support level number 1. That area held, was tested yesterday and held. You know, I wish I had the volume for you on the DAX. I just simply don't. But with regard to candle formations that are out here, no bullish candle today, if nothing else, just other than just a pause button inside the DAX out here. Looks like the DAX has put in its high for the time being, not even challenging the March 15th area. A little bit different in our marketplaces out here. That's what's going on there. Let's peek in on bonds. Bonds here having yesterday and this morning testing the area of resistance that was set up by that January 2nd level, that high 144.29 out there. Clearly, as you take a look at the lines going across the screen here, we can see a nice sideways consolidation area that is setting up. Now, what ought to happen here, if this area holds as resistance, you should see bonds move their way all the way back down to the lows. All the way back down to the lows. That'll take you down right around the level of 140.23 out there. That's if this level holds. And if this level doesn't hold, and today I expect it to be a relatively somewhat flattish day out. You know, we've got the end of the month, the end of the quarter, everything taking place out here, the end of the week. So you got plenty of ends in place out here. And so you kind of expect that we'll see the market either move slightly higher, or to flat out here. I don't really expect much of a down market. That says here, in the case of bonds, that they'll just simply rev up their engines and possibly try to jump over this creek out here that it's set. And we take a look at this consolidation level here. This consolidation level says if, in fact, bonds do break from this area because of that sideways consolidation, if it does break, it ought to make the same move that it did during that consolidation phase. That would take bonds all the way up to the 149 level. So it's either going to break this area, move up to 149, or move all the way back down to the lows out here of this consolidation range. That's in bonds. little different message here in light sweet crude. Light sweet crude right now, let me just refresh my screen. Having been able to have made that point 786 retracement area, that was 96.33. Trade out at 96.62 right now. Looks to me like oil still wants to move even higher. And I say not just 98.24. Looks to me like we'll see light sweet crude move up to the top of this rising price channel that is in. Not good for you or I at the pump. We've got silver and gold pulling back here. Silver yesterday now trading inside that swing point from March 1st. That sets up a test of the 27.92 level. We know we've got a nice 0.786 Gartley pattern out here. So this 0.786 level being tested. It was tested yesterday. Looks like maybe it'll be tested again if this level fails, meaning a close below 27.92 right now. That'll set up a run. That'll set up a 100%. That'll set up a run all the way down to the June 28th level, right around $26.10. But that remains to be seen out here. Let's go take a look at Goldilocks. You've got gold traveling in this little triangle that's being created out here. Still doesn't look like gold. And the gold is stronger than silver. If we take a look at the same swing points out here, which I believe on silver, let me go back again. I think it was March 8th that was trading into, but let me make sure that I'm using the exact candles out here. Let's see, that was March the 1st. So March the 1st, let me come back here, take a look at the gold chart. As we take a look at March 1st, that is right, where is March 1st? There we go, March 1st. You've got gold not down into that level. That would take gold into about 1586.90. That's the high out there. Gold just continuing to form a nice little bottom here. King dollar, let's take a look at the king here before we go to break. The U.S. dollar index pulling back just slightly right now, trading out at 83.29. Looks like it really does want to go ahead and crack this 0.786 pattern here, and that means that it wants to move to the upside. And that being the case, if that's what it does, not only will the U.S. dollar index move up to the July 24th high of 84.25, it'll go ahead and most likely turn into a butterfly. And my projection is 87.76 on the U.S. dollar index. In the pre-market here, we've got Repros Therapeutics. They are jumping. They closed at 9.13 last night, out with a good report, I guess, on one of their successful tests, trading at $15. 877-927-6648. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the market, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And Now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow up 27 points, trade out at 14,553. Composite up almost 2 points. The S&P up 1.5, trading out at 1564. Russell 2000 up 2 points, trading out at 952. Google down 58 cents. Apple off $3 right now. Popping to the upside was Repos Therapeutics. That's up 72%. That is a wild riding stock out there. It's up $6. Right now, you got Biogen, BIIB, not so wild there. Back up, again at all-time highs. Right now, trading out at 188, so that continuing its breakout. Decker's Outdoor up $3.60. The Master Blend, DEMBF, that's up 27% out there. Don't know what is behind that move. Chicago Bridge, CBI, that's up 5% this morning. Anheuser-Busch, this bud is for you. BUD is the ticker symbol. They're up 2% this morning. Amazon up $1.60. Goldman Sachs up $1. Mosaic, MOS, up $1 as well. To the downside, you've got PVH Corp. That's off about 4%, off $4.40. Apple right behind them, off $3.35, 5 below FIVE. That's off 7% this morning. We'll take a look at that stock chart. That's off $2.75. Alexion Pharmaceuticals off a couple bucks. Red Hat down $1.65. Baidu off $1.39. Toomey, the luggage company, they're off $1. 877-927-6648. Let's start off by taking a look at BIB here, BIIB. Let's take a look at this on a longer-term chart. Clearly, this thing is sailing. It is in the overbought condition out here, but that doesn't seem to be stopping this equity. This thing has a look at this thing. This is a little rocket ship out here. The lows back in 2010 out at about $46. It's at 188 right now. Volume-wise, boy, on the let's put this on a weekly chart. I got better volume candles out here on a weekly chart. Boy, if this thing ever does fall out of bed, this will head all the way down to $103 out there. I'm not saying that it will, but that's the last time that you see any real volume, any significant volume inside this equity out here is all the way back down there. But right now, it looks like clear sailing. It has no resistance, that is for sure. Take a look at this on the weekly chart as well with regard to relative strength, and it truly is up in the overbought territory. I don't suggest going ahead and chasing this equity here. Would be nice to see this pull back and do it in a way that it pulls back on some lighter volume, work off some of this overbought condition out there. Let's go take a look at Decker's Outdoor, DECK. Let's go see what is going on with this equity here. Decker's gapping up this morning. Let me refresh my chart, just make sure we're looking at good active data here. So Decker's is, this thing, give me a moment. Oh, I just lost it. Okay, let's go back and take a look at Decker's Outdoor. So gapping up this morning. Come on, baby. There we go. It was having just a little bit of eye-hand coordination. So we take a look at Decker's Outdoor right now, what it's doing, trading up into a resistance area. This equity here was certainly a high flyer. High flyer back in October of 2011, trading up at $118. Went from $118 down to $28. That was in November of 2012. So did that in 1 year's time. How about that for a haircut out there? $118 all the way down to low out here of 20. Let me get the exact low for you. This low was put in on October the 31st, $28.53. Now, one of the things that sticks out as you take a look at this chart is a huge downdraft. That day took place on April 27th, 15 million shares to the downside. Let me just clear a couple of things off of this chart here, make it a little bit easier. In fact, let's just clear most everything off of this here, and then we'll start taking a look at it. Get there to that. All of these things out on Decker's Outdoor. Delete. There we go. Okay, so now we'll take a look at Decker's Outdoor. It clears it up, makes it a little bit easier to take a look at. So we're going to draw lines here. We're going to do one first, draw a line right at the bottom of the session where it broke down. That's going to be the low of April 26th. That price point is $69.80. Then we're going to draw a candle at the top of the session on the following session, April 27th. That price is going to be $56.65. You can see that right now what it is doing, it's gapped up into that second level, gapping up into that high of $56.65. Remember, there's 14 million shares. Now, only been trading for 9 minutes out here, but it's up with 726,000 shares. It's got some major overhead resistance. The last time that it was up in this level, this is Decker's Outdoor again, that we are looking at. DECK is the ticker symbol. Ran into the resistance. That resistance really set up by that gap down. You can see it moved just a tad higher on May the 25th. Got up to a price point of $59.07. I did that on 1.4 million shares. The next day, 1 million shares. Then back inside the range with 1.6 million shares on May 30th out here. That says if Decker's Outdoor cannot get inside this gap here, what it ought to do, at least at a minimum, is come all the way back to where it last broke out. And where it last broke out was on March the 1st. That level is the low is 43.63. The high is 47. 9.3 million shares out there. And that's where I would expect that this equity will pull back to. I don't think that this equity will come back and visit these lows here, or if it does, it'll have to really pick up some volume to the upside. But Decker's Outdoor, maybe it's setting up a consolidation range. That would be in about, if we take a look at it, probably right around this level right here. Let's draw the line across the screen. Let's put this as a black line. The true consolidation range is all the way back down to the lows out here, and that's a pretty big range, 55 to 28 out there. But we'll have to see what this equity does if it pulls back into this last real sign of strength out here, because there was no real sign of strength right off of the bottom. You had a small one out here that took place on December the 3rd, but the real sign of strength in this equity coming on March 1st. So I suspect that Decker's Outdoor won't do much more than it already has this morning. It has too much overhead resistance in this, let alone how many folks rode this thing all the way down. That is a shame. You don't want to do that. There's no reason why you ever have to do that on any kind of stock that you own. Just make sure you've got some stops in place. And on this one here, you never really saw any volume off of the highs here. If you come back and you take a look at the high that came in October of 2011, no real high in this case here, no real volume off of the high. The first time you saw any volume off of the high was back in December 15th when there was 5.1 million shares. It already worked its way down to $88 at that time. That was going from the level of $118. So that was quite a haircut before you started to see some volume really come out of this equity. PVH is the PVH Corp. That is getting hammered. That's the leader in the clubhouse this morning on the way down. So let's go take a look at PVH. This is gapping down. Boy, let's go see what this is moving into. Okay. So as we take a look at this equity here, it had a sign of strength, and it looks like that's where it wants to back up and move into. That sign of strength is the gap up that formed out here on October the 31st. The low there, 105.01, the high of 112.47. Let's draw the line across the screen here. Again, PVH is the ticker symbol that we are taking a look at. And what we can see here on PVH, give me a moment here. I want to take a look at something else here. As we take a look at this, right now this morning, it's got 600,000 shares. It last had a sign of strength here when it gapped up with 5.9 million shares. So that's where it's headed to right now, is going to be to test the low, which is 105.01. Quite a wide gap out there. This gap was not totally tested here. The equity had gapped up, and then when it moved back on November 14th. It moved up higher on October 31st. Never made it all the way down into at least to test the bottom of that gap. You really like to see it do that to give you some type of indication that the gap is going to hold. In this case here, it has not been tested. It moved back on light volume, that's for sure, 900,000 shares, but never got down and tested that level. You could move the line of support up right about here, but what I would do is I would be benchmarking it against the first test down there, which was 900,000 shares, and already this morning it's done 600,000 shares. So that's why I really wouldn't use that level right now as this equity here moves back. That's PVH Corp. It's got quite a few gaps out in the stock. The other gap out here took place on the August 28th time frame, between August 27th and August 28th out there. In this case here, it came back, it tested that gap, never got down and filled it. But that was on PVH Corp. Let's go take a look at Five Below, FIVE. They are trading down just a bit this morning, off about 5%, down $2 and change. There is some volume here to the downside, so let's go see where this might be pulling back into. Boy, almost every stock chart we pull up has got some pretty significant gaps in it. So let's take a look at Five Below. This is a IPO that came out back in July 19th, 2012 out there. Had a little sign of strength back in November as it moved up, gapped up with 2 million shares. You then have a high-volume day out here. Not exactly wide price spread, so I don't know what was behind that move. That was 7 million shares. That is on January 30th. That's the area where right now it's pulling back into. Now, what this did, this was pretty nice because this thing broke out on November 30th. So this is nice. Let's take a look at how this came back and tested the gap area. So we'll put the red line across the screen, and we'll do that as well on the area of volume. So this equity I mentioned broke out, gapped up on November 30th, does it with 2.1 million shares. As this comes back to really test the gap, and that we're talking the lower part of the range there. We're talking about the low, we're talking about the high of that gap up candle, and that's really your better trade opportunity out here. As the equity moves down, the first time it gets in there was January 8th, 354,000 shares, which was going against 410,000 shares on November 29th. That's a nice test. That is absolutely a nice test. Again, we're looking at Five Below. The ticker symbol is FIVE out there, and pulled back. Didn't make a hammer candle or anything like that on the first pullback. Did make a little piercing candle on January the 15th. Pulls back with 379,000 shares. Truly closes the gap on January the 14th. Again, that going against not just the candle that it broke out from, which was 410,000 shares, but also that 2.1 million shares. Then you get that little piercing candle, you move back above it, and then wide-ranging bar right here on January 16th. That's how you want to be able to go and buy a breakout. And that was a opportunity. If we take a look at what this equity has done, let's take a look at the A to B equals CD pattern here off of the actual IPO low, which was $25. up to the high on October 1st. That level was $40 even, Stephen. Pulls back down to November 28th. What we can see here, pretty cool. This makes a 1-to-1 A to B equals CD. That price projection on this equity was $42.74. What it actually hit when it completed that was $42.78. It does that on March the 7th out there. Pretty cool. Then what we see here, once you complete an A to B equals CD, what you know is usually an equity is going to do something different. And that's exactly what 5 has done here. Now what it's doing, it's moving down, and it's moving down into that candle where it first broke out from. So let's go ahead and draw the line across the screen here. We'll put that in as a black line here. So we've got that, and you can see it's trading below that. So it looks like 5 below. May give you another opportunity to get into this equity. And what you'll want to do is if you had this on your watch list here, I wish I could tell you what took place on January 30th. You probably want to go take a look and try to figure that out. I don't, when you see high volume like this and you don't really have much in the way of wide price spread, quite frankly, I'm never sure what to make of it other than to watch as it trades into that level. So right now, it's an area where you have the bulls defending their position here, but ideally, this will go ahead and pull all the way back down and test that first sign of strength that we saw here back on November the 29th out there. But this may be all that you get out of it. I'd watch this trade here for a few days and really go ahead and monitor the volume. If we take a look at retracements that it's done so far, let's go ahead and take a look at that. We'll put up that wonderful Pesavento pattern tool on the stock chart. Oh, that's interesting. So as we take a look at this here, coming off of the area where it had broken out back in November down at the lows, what you can see, it's done a 0.6, basically about a 70% retracement. Let's actually see what the number is here. No, let's not take a look at that. It's done so let's take a look at the swing point that we'll measure from January 15th. It has done a 0.618 retracement from there. It's done a 0.786 retracement off of this swing point in January 25th out there, and really about a 1.272. It says 1.17 on my screen here. That is close enough for me in my line of work to be a 1.272. Looks like maybe 5 below has got quite a bit of support at where it opened this morning. 877-927-6648. We'll be right back.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks, to Terrific Thursday here at TFNN. And it's terrific because following the Money Masters show, we've got our man Basil Chapman and Larry Pesavento. I believe he is tooling around the United States here. Then we've got Daryl Martin, David White, Ken Shreve, and the Tom O'Brien show from 4 to 6. Right now, the Dow is up 20 points. A composite and S&P are basically flat out there. Well, I should say the composite S&P and Russell 2000 are flat. Let's go peek in on some of the sectors inside the S&P. Let's start off by taking a look at the XLF. It's traded at 18.15. That blue little squiggly line that you're looking at, that is the Basil Chapman, Johnny Cash walking the 9 EMA. Right now, last couple trading sessions here, really the last 1, 2, 3, 4, 5, 6. The last 5 of 6, it's been traveling below that level out here. No real volume. Anywhere. It has not really tested an area of support here recently. You'd look at the March 5th level, and really the first test would be coming at the lows there at 1787. To give you any kind of a signal, I can tell you that the summation index for the XLF still continues to tick down out there. That is not a good sign out here. It's a sign that the financials want to actually pull back. This is not where I would not go short the financials. Instead, I would be looking at the financials on any kind of pullback. Your first area that you'll be benchmarking is going to be March 5th, 66 million shares, so nothing great out there. It did gap up from 36 million on March the 4th. But if you take a look at volume here, volume averages around 40, 50 million out here. So I would suspect here at 66 million shares coming back and testing March 5th, it would more likely come back and test the March 4th area, get down to the top of that gap, which is 1780 out there. You get a close inside 1780 on the financials, and then that sets up coming all the way back to that January 2nd level that eventually will get tested out there, that breakout session. Let's go take a look at the energy sector, the XLE. The XLE, actually, the last couple of days has been ticking up inside the summation index. That says that the XLE wants to go tag the high out here from March 14th. Now, March 14th has about 11 million shares. You closed up inside it yesterday on lighter volume. So it looks like it's going to go make a test of that swing point, and I suppose it's going to happen when we see the S&P go try to tag its highs out there, that 1576 level. But right now you've got the energy sector traveling with inside its most recent swing point and doing so with light volume. So far today, 723,000 shares, but you should expect, I should say, today to be a light volume trading day. Of course, the entire week has been light out there. Right now, the energy sector won't give you any real signal until it tests $80.14. If we take a quick peek at Exxon Mobil, XOM is the ticker symbol. That is the real driver behind the energy sector. So let's go see what Exxon Mobil is doing out here. Exxon Mobil has a swing point, a TD Combo 13. That is up at the January 29th level. That has 11 million shares. The low of that candle, 91.20. The high is 91.93. 11 million shares so far. Let's see, yesterday did about 12 million shares, so it should be able to at least get up to the low of that. That will go ahead and pull the energy sector so that the XLE will go test its high. So expect ExxonMobil to move up to about 91.20 to 91.93 out there. Folks, if you're off to start your day, off to start your holiday weekend, have a great weekend. I'll look forward to seeing you on Monday. If you're sticking around, that'd be a great thing. But always remember this, folks, and that's that you have an amazing power within yourself. And that power is so strong it'll create a life of abundance, cure incurable diseases, build billion-dollar businesses, paint magnificent masterpieces, but most of all, create fantastic, loving families. Thanks so much for being a part of the TFNN family. Have a great day, great weekend. We'll look forward to seeing you on Monday. Take care, folks.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.